what's a trading plan? Trading plan or a trading checklist. This is a trading plan. Uh, I call it trading checklist because I'd like to actually, these are all fillable. This is a PDF format. If you'd like a copy of it, please let us know. Send us an email. We'll send you a copy of that trading plan. So simple. As you're working on the computer, you can fill it out. So for example, let's fill this one out for the shares last time. What was the simple for him? Was Twitter. So you can type here or you can handwrite Twitter, right? It's actually a fillable PDF. What's today's date? Whatever today's date is. Number of the trade number of the day, that was his first trade of the day right here. So you can do one. His maximum loss per trade. His maximum loss per trade for this one is not $500. It was actually $50. But we'll assume he bought a 1,000 shares, now not 100 shares. So $500 is his maximum loss per trade. 25 cents per share times 1,000 times 2,000 because he had two legs. So $500. So as he goes down here, his trade strategy, his trigger, his entry strategy or trigger, he goes like this. He bought at the whole number. You remember he bought at 42? Yeah, he bought at 42. So he bought at the whole number. So you kind of check mark this one. Second thing is, and that was 100 shares, right? Initial position was small. So you circle this one. It was 100 shares. And you continue to fill that. So it gives you a path to where you're going. So, and it was $42, right? Was he long or short? Yes, he bought, so he was long, right? What was his initial risk? If we take this one, he was a $50. So let's say $50 risk. So his initial risk was, for first 100 shares, was $25. 25 cents times $100. Then he went into building his position. As he built his position, he waited for what? For the first pullback. What happened? You remember that last bar that went down and back up? So he waited for the first pullback to go up. And it was in the top 50% retracement. So he bought another 100 shares after the first pullback, 100 shares at 22 cents in the top 50% retracement. That's what I'm saying. He executed that trade like a professional. He took that paper in the front of him and he executed everything he saw on that paper. So he built up his position. That's number 3. That's step 3. Trading plan is trade strategy, initial position, build up strategy, and then profit objectives or exit strategy. So let's see. His profits was 3-1. That was his profits right here. So he risked. His profits was $150. $150 is what he was aiming for. He did score that for both shares. He actually got 93 and he got 78. So he scored that. So we check mark this 3-1, and his profit was $171 right there. And matter of fact, his daily target was actually $150. So he met his daily target too. So you could check both of these. Did he stop out? No, he did not stop out. So you got nothing to do with this particular step. Whatever he puts here is going to actually calculate all of that, and his trade performance gave him $177 profit. That's how you trade. That's a trading plan. That's an execution. That's trade execution. That's a professional trading. But what do you think most people do? Most people do, they buy something. They don't want to predefine the risk. They don't want to say how much money I'm going to lose. They just go into. I feel like that Apple is going to go up because they're coming up with a new iPhone. Elon Musk tweeted that, it's going to go to the moon. Whatever the reason is, it's all about feelings. And feelings produces fear. You are controlled by fear. Number one, You are fearful of missing out, so you get in too late. You are fearful of being wrong, like Mark Douglas said. So you don't want to put a a stop loss. You are you are fearful of losing. You fear losing, so you don't want to exit your trade when it was lost, right? Or you don't want to even get the profits. But here's the thing: you don't want to even take your profits when it was a profitable trade because you feel like it's gonna go even more. And if it's losing trade, you don't want to get out because it's gonna literally secure a loss, tells you straight in the face that was a losing trade, and you don't want that. So you keep holding on to it. Emotional trading is controlled by fear because people don't have a piece of paper in front of them. Actually, they are using to control their trading. A pilot or a mechanic or a military guy that actually uh, conducts a PCMS on a vehicle, they always have a checklist. Why? They do it a million times. The pilot checks this flight or checks this plane a million times. Let's say he has I don't know, 50,000 flying hours. He did it at least 5,000 times. And next time he gets on that aircraft after 5,000 checks, what does he do? He takes that piece of paper and he reads over and he uses his pencil to check everything. Why? Because you can never, ever, ever just depend on emotions or memory or feelings. That's the way to trade. This is a way to trade to become profitable.